All right, hey, give you an update here, Stanek Insurance. You can see current rates of today, and again, these change daily. But 2-year 2.85, 3-year 2.7, and again, over 20 different carriers. But this 2-year rate actually is from Fidelity Life and Guarantee. They're an A- rated company. Actually, excuse me, the 2 years from Equitable Life Insurance Company out of Utah, and then the 3-year Fidelity Life and Guarantee. But they change regularly. But if you're going by, and then these are also on my social media feeds and also on my website. But let's kind of give you an idea as we go in here, go into the office. But you want to stay locked and loaded right here if you're thinking about, maybe maximizing your return versus a paltry CD or money market account. Fixed deferred annuity might do that for you. But I went to this whiteboard right here and to explain it to you, because I think annuities have gotten a bad rap in the industry as far as high fees. And if you buy these exotic ones with all these daggone income riders and all these other bells and whistles, sure, it can get very expensive. But if you go here, I made this whiteboard. Again, the premise of this, the construct of annuity, safety secure, okay? We're not looking to shoot the moon here, but safety secure. Second one right here, probate. Again, you can avoid probate with an annuity. Oh, I understand, if you do a POD, payable on death, or if you do a brokerage account, TOD, there's different ways to avoid probate, but it's very simple as far as when you're titling an account, you can do probate. And also liquidity of annuity, depending on the annuity contract. But I'm gonna keep this simple. Liquidity on annuities, a lot of times you can liquidate 10% per year, depending on the surrender schedule of an annuity, whether it's 3-year, 5-year, 7-year, 10-year, it's all different. And then also interest, depending on the interest crediting of the annuity. There's a bunch of annuities out there that obviously vary under interest, like the ones I just showed you right there, the 2-year. Again, I'm not so much rate specific because it changes so fast, so fluid, but you got to respect the interest. And also no fees. These fees, no upfront fees. People think there's fees. Now when you get into the rider charges, that's when you start to have these things that are deducted from the contract values. There's rider values like 1%, 1.1%. And again, depends if you want to put on income stream and so forth. And then the last one right here, tax deferral, tax deferred, meaning your annuities can grow tax deferred. But really the concept of annuity, okay, the concept of annuity right here, and they're regulated by the state. But if you look at this little circle, you see real estate, stocks, bonds, cash, life insurance, annuities, and so forth. But what they allow you to do, kind of like your Social Security, kind of like your, if you have a pension through a company, they allow you to establish a baseline of income. And that gives you tremendous peace of mind. They give you a baseline income. And then it allows you to take more market risk in other venues, other areas, like your stocks, your bonds, your ETFs, whatever you may have in your portfolio. But that's the beautiful thing about an annuity. It can establish that baseline and complement your Social Security, complement your pension, so you have a guaranteed income, whether it be 2, 3, 4, 5, 6 grand a month. And then you can have the confidence to go out to the market and get those returns. Because as we've seen here in the past few days, the coronavirus has been ravaging the market. If you look, market's up 1,000 one day, down 1,000, up 1,000, down 1,000. But for people that are 55, 60, that have a nest egg, getting ready for retirement, you can't afford this type of crazy volatility. You can't afford a portfolio, let's say, of $1 million and it loses 30, 40%, like it did in 2000, 2001, 2002, 2008. Your portfolio going from $1 million to 600, 700,000, you'll never ever recover. So it's very important to have the baseline of your income. Again, an annuity, Social Security, your pension, and then layer it with your stock, ETF, mutual fund, your bond portfolio. And I think any prudent, reasonable financial advisor, financial planner would counsel that. But more information, StanekSeniorBenefits.com, and subscribe to the channel. More cutting edge commentary coming. And then, the camera angle is going to be improving as we go forward. Stanek Insurance, located right here, downtown Bucyrus.